Hello, everybody, and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps' Trader's Toolbox, and this is the Scan Sentry Report for the week beginning April 29th. Let's take a look at some charts and see what the technical analysis is looking like this weekend. Let's start by taking a look at the daily Dow Jones futures contract. This chart quite clearly shows the uptrend that we've been in all year. But notice here in the beginning of April, significant topping signs start to come together. We have a pivot divergence signal, a bearish one, which is identified by our auto divergence finder, and it is accompanied by a trend exhaustion 3 sell signal. So this indicates to me that there's weakness in the uptrend. It's time to get out of that long position and perhaps start looking for short entry opportunities. We saw the triple trender turned bearish, all three trenders turned bearish, and about the same time our trend strength index went bearish. So I'm actually looking at this as the beginning of a bearish trend. In fact, we have this nice pullback into the short-term trender after all three trenders have become bearish. With confirmation in the Radar 3 Trend Strength Index, I'm looking for a move to the downside. And my entry opportunity is going to be if this fast line on the Radar 2 price leader crosses back under the slow line while this trend strength histogram remains blue, then that will be a bearish pullback 23 and would be a good entry opportunity to the downside. There is one caveat. We do see that after we pulled back from the top in early April, about a week ago, we did get a bullish pullback divergence, a trend divergence, which is a bullish move in this trend, and it was accompanied by this oversold trend exhaustion 1 signal. So that gave us a good indication that the price was going to move back up, and it could continue to move back up, which is why I'm going to wait to find this pullback 23 signal before choosing to enter a swing trade to the short side. Taking a quick look at the gold market, here's the daily chart, and we got a nice bounce, of course, after the popping of the gold bubble several weeks ago, and we have now pulled back into the short-term trender. And look how overbought our Radar 2 price leader is at the moment. We've bounced back quite a long way. So I'm expecting to see an overbought signal sometime soon, and we'll be looking for that opportunity to continue to sell gold to the short side. Now, I don't know if that opportunity is going to come at this level. It could retrace all the way back up to resistance, which I expect to find around 1550, or it could turn around tomorrow and drop. Either way, I'm looking for a short-term move to the downside. As we drill down to a quicker chart, this one being a 4181 share chart, we see this nice rally that was the bounce back throughout most of the week. So the shorter term trend is bullish in spite of the longer term trend being bearish. In fact, even on this particular chart, you can see that currently all three trenders are blue and below the price, meaning that they're bullish, while the Radar 3 Trend Strength Index is pointing down and indicating a bearish trend. We also see that the Radar 2 price leader is getting extremely overbought, and I would expect to see a correction to the downside sometime soon, at least to ease the pressure of this overbought Radar 2 price leader. I can also see that Radar 1 Fear Greed is showing that a lot of people took some profits off of this move to the upside, but not as many as got involved in this move. It's only a little bit of selling here in the midst of all of this buying. So to sum it up, this is a mixed market showing both bullish and bearishness, so that makes it a dangerous market to trade at this point in time. Looking at crude oil, daily chart, We identified this pivot divergence down here last week, and it was accompanied by this oversold trend exhaustion 1 signal, and we commented that this looked like a move to the upside was pending, and sure enough, that's what we got. At this point, I see that now as a retracement to this trend line, so there's some resistance here, and what I'm seeing at this point is a bearish pullback divergence, or a type 2 trend divergence in the radar 2 price leader. Not only is the radar 2 price leader making higher highs here than it was at this point, while the price is making lower highs, we're also overbought in the radar 2 price leader, which is likely to give us a bearish trend exhaustion 1 signal sometime soon. In fact, there's a little warning dot on this last dot letting me know to be looking for a bearish trend exhaustion 1 overbought signal. However, even though the divergence is bearish and the radar 3 trend strength is bearish, the triple trender is currently bullish. So there is some conflicting orientation of the trend in this given market, which is simply to say that we're still seeing up and down movement within a more generally sideways moving market. If we drill down to the 6,500 share chart to see what the beginning of the week may be providing for us, again we see conflicting signals. Here's a strong bullish pullback divergence right here where we're making lower lows in the radar 1 fear greed while we're making higher lows in the price. However, it is being contradicted by this bearish pullback 23 signal. Of course, we have bearish trend strength in the radar 3 while the triple trender is generally bullish. So it's kind of a market that's not giving us a clear signal. According to the analysis on the daily chart, I'm looking for a bearish move. However, I might wait until I identify a bearish divergence in the radar 1 fear greed before actually pulling the trigger on selling crude oil short this week. In the forex markets this week, I'm interested in watching the Australian US dollar pair, and what has my interest in this pair this week is this bullish pivot divergence which we see being generated in the radar 1 fear greed indicator. Note how it's making higher lows as the price was making lower lows, giving us a good idea that price was going to turn to the upside here, which it has done in the last couple days, moving sideways right now, but the triple trender is now bullish, as is the radar 3 trend strength index. So if we can get a nice break above this downtrend line right here, then I'm going to be enthusiastic about looking for a trade to the upside in the Aussie dollar currency pair. I want to thank you for taking some of your precious time to look at some of these charts with us here at Jan Arps Traders Toolbox. I must remind you, however, that Jan Arps Traders Toolbox is not recommending that you buy or sell anything at all. All of the examples that we show in the Sentry report are for purely educational purposes, and we are not licensed to recommend that you buy or sell anything. In fact, trading futures and forex and other markets is a highly risky and speculative business. You can lose all of your capital. So only trade with capital that you can afford to lose. However, with the help of some great technical analysis tools, you have a lot better chance at success than without them. So, without further ado, may the trend be with you.